welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for the 7th of December. It's Friday, and of course, it wasn't going to be boring, right? That was way too much to ask for if boring is your thing. Taking a look ahead to earnings next week. Very light week on the earnings front. S&P wise, we have Adobe, Costco, and FTI. Oracle actually is the following week. And good afternoon to you, Ed, and to everybody else. Hope it was a good day trading. It certainly wasn't a dull day trading. That is for sure. So we saw some early movement, but we kind of ran into resistance early, had a little bit of a failed breakout on the S&P at around 2,700 early in the trading day. And as soon as that gave up, it just, it sold and it sold. And we find ourselves, going into next week in a very interesting place, in my opinion, at least from a technical point of view. So very light week next week on the earnings front. But hey, before you know it's going to be January, we're going to have all sorts of earnings to talk about, right? But we have more interesting things to talk about than a handful of earnings here today. Here we are on the S&P 500, back down, closing right at that support level. A very interesting spot because this is going to force action early next week, right? One of two things is going to have to happen. We're either going to give up that support level, breaking down, presenting even more sell signals, or buyers are going to step in off of that support level. And while, I don't know if I'll be running off and buying the S&P 500 in that scenario, I don't think so, presenting some potential buying opportunities out in the market. So we are at support. The market's going to have a weekend to digest it. My advice, check the futures contracts on Sunday night, see how things are looking. Don't overreact to it by any means, but maybe can get a little bit of an idea if buyers are coming in off of this support level before we get into Monday morning. Important that we held there. It's not much, and there was a lot of selling and fear and volatility there. If they went away, they're back right now. So no two ways about that. But we did hold support within the S&P and within the Dow Jones. And again, as crazy as this week has been, really a lot of it's just the speed that kind of maybe caught us off. I know that's what caught me off guard, is more speed than anything. We stayed in the range. It just happened to be some pretty wild rides all week long. So, hey, what's going on, Justin? It is Friday. I think the market says TGIF too. It needs a day or two to think about its life. So watch that support level. Obviously, you guys don't need me to tell you that. Very important area of support. If you kind of look a little bit further back, if we do break that support level, there is a ways to go. In my opinion, at least, our next level of support really going to be around 25.5, somewhere in that general vicinity. Some old bottoms from days gone by. There isn't a lot of support for at least a little while if we do ultimately fail at that support level. So I'll be looking for potential, things to go into from a bearish point of view early next week. If we break, I'm going to assume that buyers are going to be tempted to that price like they have been. It is where we stopped today. We saw what happened yesterday. We've seen this area play out on multiple occasions. So I'm going to assume support's going to do its job until it doesn't. But I'm just always going to be prepared sooner or later, one way or the other. We're either breaking to the upside or the downside. It doesn't have to be this time. It doesn't have to be next week, but eventually we will be coming out of that trading range. Over on the NASDAQ, a little weaker, I think, from a technical point of view. Whereas yesterday it was kind of one of our leaders, today it was kind of one of our loss leaders. So, really we're not able to hold that intraday support from yesterday. We still have a ways to go before the bottom. It's one of the blessings and the curses of being the ugliest chart going into this week. I think we have a little ways to go before we actually get to test that support. However, you have to really, and I've been saying this all week long, and I still believe it's true. The simple reality is, whereas I could get someone making the argument to buy off of that support level on the S&P 500, I'm way too big of a wimp to be involved in that, but I would completely buy the argument. NASDAQ, I don't think you can make the same case. We are continually making lower highs and lower lows. I still think we have to treat this accordingly until it finds a way to break some resistance, which eventually will likely happen, but it hasn't happened just yet. So I will continue to be very skeptical or cautious on the NASDAQ, even though I did appreciate the efforts that it brought forth here yesterday. Over on the Dow, we did hold our support level, much like the S&P 500, bouncing off of that, catching our intraday low there, rallying up a little bit, not much, but a little bit to close the trading day. Next real level of support, if we do get these breaks within the Dow Jones, to me at least, is a pretty easy one to call. We have support right around 24. You know, it was a previous support level. It's a nice round number. That would be the area that my eyes will be looking towards next. If that one breaks, though, there's hundreds of more points to go, I think, if we get to it. And then lastly, over on the Russell, we took out cleanly support here today. We breached it yesterday, of course, on the intraday. Happened, no huge deal, but here today, closing well below it. Definitely a bearish signal, in my opinion. I think a tradable signal, to be quite honest with you. A nice clean close below a pretty easy to identify level of support, I think, certainly in the short term. But going back, we've played off of this before. I think right now you look for this to act as our short-term resistance level. If we can push back above it, okay, I'm not buying, but fair enough, I might soften my bearish stance. But really, there's a lot of room to the downside. If momentum can't get picked back up, there is plenty of selling room left in my mind over on the Russell. A nice clean break today. If we continue this selling going into next week, I wouldn't be surprised to see the Russell down at 1425 before the week was through, to be honest with you. Now, if the markets are able to hold support, I imagine the Russell will be, buoyed a little bit. I would certainly not be buying it, but, the rising tide lifting all boats is certainly somewhat true, at least in the market, but a very clean break to the downside. If you were banking on a potential double bottom on the Russell, I think you have to just say not yet. It's not today. This has taken that thought process away. From me, at least, I don't think you could make that call. So we're going into next week from a broad perspective in a very interesting spot. A break on the Russell. Don't love it, but of course, I don't think that's the most important index. I don't think most traders think that that's the most important index. I think I would argue the S&P and the Dow Jones are the big ones. They're both at support. NASDAQ a close second, and then the Russell. We're at support. We're going to have to make some calls early next week. Are we willing to buy off of that bounce, or are we going to not? I mean, it really is kind of that simple. So, it'll be interesting going into next week for sure. Of course, on days like this, and I call these all or nothing markets, and it's a type of market where everything always looks the same. It's either, everything was up today, everything was down today. It really isn't my favorite type of market, to be honest with you. I know a lot of people like that intraday volatility, and I don't hate it. I prefer a good, solid trend. Call me boring. That would be accurate. But we're kind of in that all or nothing type of market. And of course, materials really were hit hard today. Really hit hard. They started up early, as the market was kind of feeling itself out early in the trading day. Gave up and closed well below that support level, right back down here at that intraday low from yesterday. If we're looking specifically at this chart going into next week, I do think if we take out these intraday lows, that could be a tradable signal. As we work, there's really no reason in my mind why we can't work back to support. Ideally, maybe we get a little bit of a rally up into the 53. I still think the 53 is where we're watching. If we're potentially bullish, I think you need to get back above 53 from a buying perspective. From a selling perspective, I think ideally you work into 53 and start to have a little bit of shift in momentum and start to drift down. And that is the entry point that I would probably like the best. But I do think if we take out this little 2-day low now that has developed as a little bit of intraday support, could be a tradable signal on a short-term time frame, of course. Obviously, let's watch this support level down here. It has been important, and I will always I always will respect support. That's always my rule. Over in the energy, it's a tough read for me. It really is, with the way it's kind of has taken out this support level, but we have these weird handful of candles that was a failed breakdown point earlier. I still think that, like I said earlier in the week, I think, if you're going short, I get it, and I can't really argue against it. I really can't argue against it now that I think we're cleanly below that, kind of level of support. But we do kind of have these little intraday tails that we'd have to contend with. My thoughts are you look to the sector versus the ETF. You look to find things that are breaking down on their own, don't have these weird little are they or aren't they support levels to worry about, because I don't know. That's probably not reasonable for me to know if this little low here is really a major level of support. I don't think it's a major level of support, but it could act as support. I think the right play, if you are bearish within the energy sector, look at an individual stock basis. From the other side of it, if you're bullish, again, I don't understand it. I think you have to get above 68 right now as it's set up before I would be comfortable saying I am bullish. But I think again, that's just me. I do think it would be important to get back up on the right side of this old breakdown point before thinking about being a bull. Personally, that would be my bare minimum. I'm not really thinking about doing that, but that is the bare minimum that I would need at least to want to go bullish within this sector. But honestly, this looks like a pretty bearish sector to me. Right now, financials and industrials, they are in the same spot that we find the Dow and the S&P. They got to make a call. Now, we've had 2 days of holding support here on the financials. Definitely a good thing. And it probably better, because if you look at this support level, there's a lot of room to the downside if that can't hold. I don't know where it would stop, but it definitely has some room to fall to the downside. Clearly, hasn't happened yet. But if we do break that support, I do think that is a fairly strong sell signal in and of itself. But again, same time, if we bounce off of it, I don't think anybody here should be terribly surprised. Again, I'm not going to be buying a chart that looks like this for better or worse. That's just not what I'm going to be doing. But if we bounce off support, I would understand that. Keep an eye on that $25 range. You guys don't need me to tell you that, but that has clearly turned into a pretty important battle line in the financial sector. Same situation over in industrials, kind of closed back down at around $68, right around that old support level. These guys, I didn't like the way today played out, and we talked a little bit about it, I think, yesterday, where it's watching, that old trend line to turn into some resistance. What I was kind of hoping is we were going to see it kind of hang out right below that trend line today, potentially opening up some doors on early next week for some selling. Unfortunately, it got there. The thesis was right, but it completely went down all the way to support. So I don't know what you do with it now, except wait for it to test the support level, see where we go from here. This was an area a week ago I was definitely interested in from a buying perspective. A week from now, I might be, but I have a really hard time seeing myself being a buyer next week within the industrial sector. I'm not going to buy that bounce. I'm not going to trust it. I will understand people who are buying that bounce. I won't disagree with them on a fundamental level, but not my type of a chart. I would not dare buy that there. Again, we have some room to go to the downside, and that's why this market really needs to, at least if the bullish side of the market, there's room for us to sell off a fair amount more before we start testing, at least what I would consider significant support levels in a lot of areas. So we'll see. We will see. But you have to respect it. It did close at support. It did hold support. It got there in a hurry. No doubt about that. But again, and a nice thing to do, because now we can go into next week, under the weekend, looking for potential breakdowns in these areas in the broad market, and see if there's anything out there. One of the problems is, and I was doing some scanning for some breaks earlier, so many things are extended to the downside because of the heavy selling that we've seen this week, and so the nice clean breaks kind of already happened. You have to kind of dig a little deeper this week, I think, than you do some weeks. But I think it will be worth it. If we do cleanly break, that's a pretty strong sell signal. If we're seeing the Dow, the S&P break, kind of the last line of defense, at least within the current time frame, it's probably worth digging a little bit. Over in the technology department, much like the NASDAQ, really kind of sold early and often, working towards support, haven't tested support. We've got a little ways to go to that $64 range to test us over there. Let's see how that responds. Again, yesterday was a day where I finally softened my stance on the technology sector because of the relative strength it showed. And I'm not going to forget that just because today was rough in the market. Now, it still has to break some resistance before it gets me on board. But I'm interested to see how it develops. Are we able to put in a higher low? Are we able to hold that support level? Very important things, of course, going into next week. But a bad day overall. I mean, as you talk about the selling today, I mean, this ETF, the technology ETF, down 3.5%. It was a rough day at the office, regardless of how impressed I was with yesterday's price action on the tech sector as a whole. Over in staples, working back down, testing that support level. I think that support level is very important at this point. I thought it was important, last week. I think it's even more important this week that this support level holds for us as we move forward. I'm still perfectly comfortable going bullish into this sector as long as that does hold. If that breaks, that's going to look like an ugly chart pattern to me, where that's going to look an awful lot like a potential M, if you will, if that breaks. Again, I'm not saying I expect it to. Today the market doesn't sell off. Who knows? We're at 56.50 already, right? So definitely not losing any sleep about support failing on Monday. But if it does, that would be a bearish signal. I would at least go neutral within the sector if we do close below that support level at some point here next week. But it did hold today, and as long as it holds, I do think you can continue to look at this bullish. I'm just not liking. I think maybe a better way to start approaching this sector, in my mind at least, is the modestly bullish, more neutral with a side of bullish than bullish with a side of neutral, if you will. That's how I'm looking at it. I'm going to be picky. Things breaking out like Church and Dwight, for example. If we rally next week, Church and Dwight just went off the top of my head. What did CHD? Or CHD, yeah, there we go. That would be a break. So if we do rally off of the support, this is the type of pattern I would kind of be looking at, not to say that you should or shouldn't trade Church and Dwight, but if we do rally off of that support within the sector, or any sector for that matter, if we're bouncing off support in the market, I'm going to be looking at things that have held up and are taking out some levels of resistance. And just since we're talking, staples here, this is definitely one that I think I'll be keeping an eye on if we do show some upward movement off of that support level. Over in the utilities, another solid day as we're kind of dancing, doing that little dance. Hopefully it doesn't take months like our last one did, but we're basically at the high point of the ETF here, or just short of it, I guess I should say. So it's at that resistance zone. Obviously a very strong sector. Money continues to move into it, certainly a defensive sector, and the money isn't stopped anytime soon. I think you can look for pullbacks or breakouts within this sector. Some of these individual stocks, a lot of the individual stocks on the S&P 500 have already broken resistance. But so they might look a little bit extended to your eyes. If that's the case, letting them pull back a little bit, testing the breakout points could be an interesting way maybe to look at some of these utility stocks here next week. Keep an eye on that 57 area. The only thing I know with absolute certainty is that last time it was a darn big deal. And, when we got there last time, things were going really good, right? And I'm not saying it's going to hit the brick wall here at 57 and this is the end by any means. But I'm going to respect that number because that's the only truth I know, at least in this time frame, that was a big deal. That was the end of a pretty good run. It should be difficult to break. So obviously that's something to keep an eye on. If we break that, that would be a very nice signal that there's more in the tank for utilities to me. Healthcare. They're going to make my life tough all weekend long. One of my favorite areas, and while it's clearly not been as strong as real estate, as the staples, as the utility sector, I think you could say it's clearly been stronger than discretionary, technology, communication services, industrials, financial. So it's kind of in that middle range. I think objectively speaking, I really like the sector. I still think there's good opportunities in the sector. And of course, it closes right at that little trend line that I've been kind of eyeballing here as well. I can't see, if it, again, going into Monday, if that trend line breaks, I think you have to be very cautious within the sector. If that trend line holds, I can't see the triggers being on Monday morning for me. But going into Tuesday, if we do see some price appreciation, some upward movement off of that trend line, if it looks right, I guess, and it can't look right on Monday, so I need that turnaround candle. But if it looks right, I'm open to this chart. To be honest with you, I'm open to the healthcare sector. I'm probably a little more bullish on it than some of the other coaches here at Tackle Trading, I would guess. But it wouldn't be me if I didn't like the healthcare sector. I like where the sector's at right now personally. I don't mind it. Interesting pullbacks there, and I found quite a few pullbacks that weren't textbook pullbacks in the sector as I was scanning, but I did find a handful. Let's go see if I can find a couple really quick. My deep analysis. This is kind of the thing that I've noticed. A lot of the pullbacks are just not going to look quite pretty. Here's Express Scripts, closing a little bit below the 50. They all have a little wart or something like that on them, Holics. But I found a lot of things that pulled back that, again, I don't see any scenario where Monday morning I'm ready to party with these guys. But I can see a scenario where if we start to see some money move back into the market, move back into the sector, they're going to be fairly interesting. It wasn't but a week ago where we were thinking about having to buy, the all-time break, right, within the healthcare sector. Just last Friday, we were looking at it and we were basically challenging that level of resistance, that all-time high at 96. So getting a pullback, I don't want to complain about it. It's not pretty, and it's going to need a few days, I think. But for me, at least, as long as this trend line holds, I am personally interested in this area. I understand if you're not, though. I can get that. Over in the discretionary, a lot like the tech type of chart, hasn't broken support, hasn't tested support. We still have a little ways to go down to that maybe 102 range area to test that support level. Clearly, in the downward swing of things, overall off of resistance. You do have to be careful in here, of course, because this chart does have a lot of overhead still above it. And I don't really see great trades, at least ETF-wise, on this early next week, personally. I think it's going to need maybe even a full week to shake out. As I was looking at a handful of these charts, I was surprised. Last week, I found a lot of things that looked really interesting. Mainly, I was finding bearish retracements and breakouts. Most of the breakouts didn't ever, come through this week. A lot of the retracements, of course, were hit, on Tuesday for potential entries. But this week, I really didn't find a lot that I found all that interesting, and I was a little surprised, because I'm always kind of surprised when I find more or less than I think I should. Real estate, interesting day in real estate. I like what it did personally, selling off, caught up in the selling, closing right at that breakout point at around 34. Again, I don't think this is a tradable candle. I'm never going to be the guy that sees a big red candle and buys the next morning. That's just not who I'm going to be as long as I'm me. But the price is definitely right. If we see some signals going into early parts of next week, I would have no objection to buying this chart here. Certainly very open to looking for opportunities within the real estate sector. We do have some overhead, as we've talked about before, but it is a ways back. Gosh, I can't even do that. I have to bring up a weekly chart to bring that up at around $35. The only real flaw, I guess, if you want to pick one out on the sector, is I don't think we cleanly broke out on the weekly chart. If we would have closed just a little higher, I think we could say that we did. We were right there on the verge for sure. That's being a little nitpicky because that wouldn't stop me, if I get some signals early next week. But very nice to see that support level hold. If that support level or that breakout point does falter, I think secondarily we can look at this trend line, the 20-day moving average, that general ballpark for some pullback opportunities. Both of those places are areas that, from a price point of view, have to see how it looks when it's there. But price-wise, I think could be interesting spots on the sector. And then lastly, over in communication services, again, it's kind of one of those, discretionary tech type of situations, maybe even a wee bit uglier to my eyes. Again, I really have a hard time seeing this being something you look at from a bullish point of view as a whole at the sector. Just way too bearish. Way too many failures, failed attempts to make higher highs. Has never done it in its short existence. from a buying point of view, I don't understand this chart right now. I can't get behind it. From a selling point of view, it's tough. We're too close to support. I think you're going to have to look at a break, which means probably things are going to be extended, which probably means it's not going to look very good from a technical point of view. Just kind of what my gut tells me as we're going into next week collectively within the sector. Still very bearish in my opinion. Can't fault anybody for selling it. I just wouldn't understand how you could just not yet. How can you buy it? I just can't get behind that just yet. So I mean, we are going into next week kind of in a spot where we've got to make some decisions. You know, we can be flat for a day or two, just hang around. Although I don't know if any of us here believe that that's how it's going to play out on Monday morning with all the action we saw this week. You know, I'm going to be surprised if I see a small doji on Monday, no doubt about it. But I mean, we're at some important price points and some pretty important support levels, in my opinion, at least, going into next week. So it should be interesting. It definitely should be interesting. Over in the metals market, gold kind of continuing to push up as it continues to hold that breakout point. Right now, I still don't fault anybody for moving into gold. I do think you want to keep an eye on that 200-day moving average. I personally expect it to be a natural point where short-term profit takers look to lock in some profits. I know I'll be looking at that number. That's all I can say. You know, I know that I would be looking at that number at the 200-day moving average. I wouldn't consider that a sell signal, more as a profit-taking zone. I wouldn't go bearish at the 200-day moving average personally, but I would expect it to at least be a short-term barrier. If we get a little pullback there, that wouldn't surprise me at all. And again, it might just push right through, obviously, but that is kind of where I would be kind of looking at the first real challenge that we're going to have since we took out that 1240. Still, you know, overall bullish chart. Can't fault anybody for buying into that. Another nice day in silver. I do think gold is in a better spot. But it's getting closer and closer to what at least I consider, you know, its first major challenge in the form of that 200-day moving average, whereas silver still has a little room to run before we work into that, you know, just shy of 15. Again, I completely understand if folks are buying into this. I have no real problem with it, but I do still believe the gold chart looks better. I still do believe that the break of 15 is the signal that I want to see within the silver market. But a very strong day over in silver as well. Dollar, you know, I think you have to say that it closed below its trend line today. Now, I think there's probably a little room to debate that, and I wouldn't go to war if Justin said no, it didn't close below it. But I think it closed below it, and I do think that matters. Not a lot, but I think, again, as I kind of said yesterday, I think for me, I think it's more of that kind of neutral overall. Yeah, if I have a bias, it is still to the bullish side and will be as long as we hold $96. But I really think that the way this chart is developed, it has turned more into a neutral chart than really a buyer's type of a chart. Closing below that support, trend line, at least in my opinion, not a huge deal because I do think our major support level is at $96, but not great. You know, that's not a bullish signal by any means to me. So I think, you know, for me, I'm going to be looking at this, you know, go range bound for a while. That's fine. If you are a Forex trader, you just, you know, be a picker, you know, pick your pairs. If you're just specifically trading the dollar index or UUP, then I don't think we're going to see, you know, I'm not seeing a great signal right now within this area. I do think, you know, I think we can do better from a technical point of view personally. Natural gas gave us a little bit of a signal. I don't know if anybody here ended up taking the trade. We kind of consolidated, going a little back and forth early this week. Had a really solid day here today, and then if you go into the hourly chart, early in the day, it actually took out that downward trend line that established to be pretty consistent, closing above both the 9, the 20, and that trend line right here, as you can kind of see. Definitely presented some short-term entry opportunities. I hope you traded it, and if you did, I hope it went well. If you didn't, I understand. Not everybody's going to trade off of an hourly time frame, but I think we talked maybe a couple days ago about using a shorter-term time frame to create entries if you are bullish but not getting those textbook type of retracement, or if you're bearish not getting those retracements that you want. And that's just I thought was a good example of how we can use those shorter term time frames going forward. Really, as we kind of look specifically at it, I think we can now kind of dip our support level, our primary support level. This is a week's worth of trading. So I think we can kind of look at this kind of as our primary support level, with this being our secondary level of support. I think $4 is kind of the big number right now, but at about 425 has really started to develop as a little bit of an intraday support level. I think for me, I'm comfortable calling it 480 at resistance. I know that's not perfect. I know we've, fallen just short, broken through that on the intraday a time or two, but it looks like that nice 480 looks kind of to be the current resistance that we are working with. I will kind of expect it to work back towards that, but obviously the open on this weekend can have an impact on that, no doubt about it. Still, fairly difficult from a truly swing trading perspective. Intraday opportunities have definitely been there within the natural gas market, no doubt. But swing trading, it's been tough, really since we broke out. And even when we broke out, we had this little 4-day consolidation, then another breakout, and it's been fairly difficult from a swing trading point of view, even though it's been very strong. I don't think it's changed too much just yet. But I'm going to continue to kind of watch that. $4 is my main support level, 480 is my main resistance, and about 425 as a little bit of an intraday level. If we can kind of see us develop a little bit of a top next week, or extend this top that we've developed, on the candlesticks as of late, we may have that short-term intraday opportunity of a break above 460, working up towards 480. We'll have to see how it develops. And again, that would be more of an intraday type of a development, in my opinion. But I could see it developing again, depending on how we open here next week. And then over in crude, OPEC cutting things back a little bit. I don't know that it matters. I'm going to pretend it doesn't, because that's my general philosophy when it comes to news and short-term trading. It's all noise. If it matters, it'll break resistance. If it doesn't, it'll break support, right? I'm not much of a newsie. Those of you who know me know that. I would live in a bubble if I could. I can't, but I try to live in as close to a news bubble as possible. Because I don't like to be influenced one way or another, especially in the shorter term. I know not everybody agrees with that philosophy, and that's fine with me. You do what works for you. But once again, we've really established a range here on crude, just above 54. Obviously, we know what the support level there at $50 is. We're continuing to trade within that trading range. If we do take out resistance, I wouldn't do it. I'm not bullish on crude, and one break of resistance wouldn't be enough, but I would call it a short-term tradable signal. If we do take out resistance, I would be watching, this trend line as my primary selling point, and I wouldn't mind that at all. If we do end up taking out resistance, which I'm not betting on, but it doesn't mean I'm right. Watch this old trend line, as if we do approach it, that would be a really interesting price for a bearish retracement. We'd have to get some appreciation to get there. Obviously, I don't really think that's what's in store for the upcoming week, but I don't know what's coming for the upcoming week. I do know where resistance and support is. I do know that if it breaks 50, that is a shortable signal, a tradable signal I'm open and very interested in. If it does break above this resistance level, I would call it a bullish signal. It's just one. It's a short-term signal. It's not enough to get me off of my overall bearish stance, but I wouldn't be selling at $55. I would be waiting for it to work into the 58 range, 59 range, if that's the way it plays out. So even though I wouldn't be on board with buying it, I understand some people would call it a break and would probably take that trade. Keep an eye on those two prices. Good chance that we kind of continue to dance within those prices next week. Of course, it's hard to get out of a range. We've seen, many things. We've seen commodity, we've seen gold, we've seen silver, we've seen crude. We've seen, these commodities go into ranges for an extended period of time, but sooner or later it's going to have to make a call, and that doesn't have to be next week, but sooner or later we're going to be breaking out one way or the other. I think the best signal we can get is a break below 50. I think I'm not alone. I'm not on an island in thinking that by any means. But again, if we do take out that resistance, obviously you have to consider there's risk there, but I do think anytime a stock breaks resistance, you have to consider that at least, a step in the right direction from a bullish perspective, right? Whether it's enough for you to trade or not, I guess that's your call. Not enough for me if we see that break. But like I've said many times, no one will ever accuse me of being bold. That, ladies and gentlemen, is going to do the market recap for today. But let me ask you guys a quick question before I let you get out of here this afternoon. From a timing point of view, how much time feels right for these recaps? When I first started doing them, my goal was 15 minutes. And I found that very rarely can I get done in 15 minutes. So, I went into, I want to do a good job, and I want to be helpful for you, for myself. And so I kind of found, then I kind of went into 20 to 30 minutes. And most market days when there's not, high volatility, I found that was working pretty well on, in my opinion. When there's a little more volatility, I think naturally you have a little deeper conversations. Do you guys have any thoughts on that? I mean, would you like me to try to be done in 15 minutes? Do you like going a half hour? I don't like to keep you too long or anything like that. But if you have any thoughts, I'd love to hear them. Definitely open to your feedback. So if you do have any, don't be afraid to share them with me, whether it's here or anywhere else you see me. You guys see me from time to time. So, but ladies and gentlemen, that's going to do the market recap for the day and for the week. It's going to be an interesting week next week. And it was definitely an interesting week this week. Gap up, a little premature celebration. And then, legacy. That's kind of how I feel, 30, 35 minutes on volatile days just seems like it just goes by so fast, and right now, like I said yesterday, until volatility dies down, I think the best approach is to assume that it's not going to die down. Assume we might see more big movement here going into next week. It will eventually die down, but until I start to see it, I'm just going to assume that, we're going to see big candles, until we stop seeing them. So, of course, ladies and gentlemen, it's always my pleasure, and I appreciate everybody's time. Make sure you're getting through to the scoreboard, through your reports, through your watch list, but make sure you're spending time with your friends and family, doing the things that you love. If you're out doing some Christmas shopping, good luck to you. Hope you find all you need and it's not too crazy. So, you're a VIX guy, are you, Ed? I'm not a VIX guy. I'm kind of on Matt's school of things, but we can take a look at it in the future from time to time if you would like to see where it's at. I don't have an objection to peeking in on it from time to time. So I'll put that in at least an occasional on interesting days. How's that sound, Ed? On days where we're really boring, nothing happens, we'll let it go. On interesting days, though, we'll take a look at it. I'm okay with that. Have a good weekend, of course, and I'll let you guys get out of here. But again, thank you so much for your time. Be sure to subscribe to the channel if you haven't already, and hit the subscribe button. And follow us over on Twitter if you aren't already, to see kind of what we're seeing during the intraday. If you like the market recap, it's always helpful and appreciated if you do give it a thumbs up to let us know that it is helpful and we're on the right track over here. With that, hey, thanks, guys, as always. Thank you for your time. You guys have a wonderful weekend. Happy trading, and I will see you all in the next one.